Hello everyone. Hope everyone's doing great. Today's another beautiful day. We just went through a long weekend, and today is actually Tuesday, September 8th, 2020. So I want to thank you all for being here today. As usual, if you're an old subscriber, thank you very much for subscribing. And for new subscribers or if you're new to my channel, my name is Unwana. And every week I try to share content on strategies I'm implementing in my life to, improve my personal finance and also grow wealth. So if this is your first time here, thank you very much. So the topic today, I'm going to jump right in. But before we get started, I just want to put a little disclaimer out there. I am not a tax professional. I'm not an attorney. I'm just a regular guy on YouTube. My daytime profession, I'm a banker. So I do have some understanding of certain things when it comes to finance and also credit. So now that that's out of the way, so if you need help, make sure you seek professional advice. And so let's jump right into it. So the topic today is why credit is important for wealth creation. So like I mentioned earlier, I'm in the financial industry. I work for a bank. I'm a manager at a bank. And one of the criteria that people need in terms of getting a loan, whatever loan you're looking for, is your credit. And some people don't take their credit seriously. I know there are gurus out there that tell you don't need credit, okay? You don't need debt, okay? But not all debt is created equal, all right? So for you to be able to grow wealth and to be able to advance yourself, you need to have a great credit, all right? And that's what's lacking today. And it's very easy for us to get in trouble with our credit. Speaking from personal experience, okay? In my previous videos, I did mention how, if you have any form of anything that affects your finances, it's very easy for you to fall behind if you don't have a safety net or a cushion for you to be able to handle your expenses and your bills, okay? Eventually your credit gets ruined, okay? So it's very important that you pay attention to your credit. Like I said, there are other people out there that tell you don't need credit. However, in the society we live today, if you want to acquire anything, if you want to grow wealth and build wealth, I'm finding out that you're gonna need to have credit, okay? Because unless you have all the money in the world for you to be able to invest and grow your wealth, then you don't need the financial system. However, if you want to get plugged into the financial system, if you're looking to buy a house, buy a car, whatever you want to do, you must have great credit. So I'm going to leave a link to a couple ebooks that I wrote. The first one is called the Credit Booklet, okay, which is based on things that I have over the years, okay, and also based on my banking experience, okay. I wrote this little ebook that will help someone who's either starting out new with credit or someone who's already used credit in the past, but maybe got into trouble with their credit and they're looking for a way to, rebuild their credit and get themselves back on track. So these are some of the strategies that I am implementing in my life right now to get my credit where I need it to be and also to help others. So I'll leave a link in the description below. So just check the link there to get your copy. It's on Amazon right now. It's very inexpensive. Just click the link to take you there. You can order a copy. I have a digital copy, or if you want a hard copy sent to you by mail, okay? Then the second book I'm gonna have for you, another ebook, it's Wealth Creation Blueprint, okay? These are things that I have accumulated from my experiences with my mentors, okay, with people who are multimillionaires right now, what they have used, what strategies they have used to amass wealth, okay? So don't forget to click the links in the description below to get a copy of those two books. You might find it very useful. For those who are already savvy with credit, you might not need the book, okay? But for those that are either new to credit or are struggling with credit or don't understand how the whole credit system works and also wealth creation, don't forget to click the links below. Okay, so that's it for my ebooks. So now let's jump into it. So for those who are brand new with credit, there are 5 things that affect your credit. Okay. Number 1 is your payment history. Okay, you got to make sure that you pay your bills on time. Speaking from personal experience, sometimes you let things lapse and you don't pay attention. It all comes down to planning, okay, having a budget, okay, being disciplined with your finances, okay, having everything structured so you know when your bills are due, okay. So your payment history affects your credit. So if you're late on payments, it gets reported to the credit bureaus, and then the credit bureaus sell your information to other lenders and other financial institutions, okay, whenever you go to apply for credit. So the first thing you have to worry about is your payment history. The second thing you want to worry about is your utilization rate. So what utilization rate means is based on the amount of credit you have, how much are you using? So for instance, if you have a credit card with a limit of $1,000 and you use $300 to buy, let's say, Gucci bag or a Gucci shoe or Gucci belt. I'm just using this as an example because I know some people out there like Gucci. All right. So you spend $300 on a Gucci bag. Okay. Now your utilization will be $300 divided by 1,000, which would be 30%. So that means you've used 30% of your available credit. Now, the higher your utilization, the worse off you are. You get dinged on your credit score because you're stretching yourself too much. So lenders don't like to see that you're using too much of your available credit. So ideally, you have to be under 30%. But for you to have a great credit score, you have to be at least under 10%, ideally 7% or below, okay? They still want to see that you're using your credit, but at the same time, you have to be responsible with it. Now, the third factor that affects your credit, okay, is the age of your credit. Now, for some people, if you're just starting out building credit, this might be a disadvantage for you because you don't have that length of time. But for others who have been in the credit game, who have been in the financial system, okay, time is your friend. Okay, so the longer you've had accounts, the better your score is going to be, provided everything else you're doing, you're paying your bills on time, and you're not over stretching yourself. So the third thing now is the age of your account. The fourth thing that affects your credit is your credit mix. So if someone that just has credit cards on their credit file, okay, will not have a high score compared to someone who has a credit card, a mortgage, a car payment, or other consumer loans or home equity. So based on your profile and based on how much debt or how much exposure you've had in the financial system, you get more points for that. So someone who has a mortgage, has a credit card, has a car payment, lenders want to see that you're able to juggle all those things. All right. So the mix of your credit also helps boost your score. And then the final thing is how much new credit have you tried to acquire or have you acquired? Okay, which comes in the form of, credit inquiries. Okay, so inquiries stay on your credit for 2 years. Okay, but the longer an inquiry stays, the less impact it has on your credit. So lenders don't like to see that you're shopping around trying to get a lot of credit. Okay, so it makes them nervous that what's going on with this person that they are trying to get a lot of credit. So now that we've gotten that out of the way, so those are the 5 factors that affect your credit. Now, how do you use credit to grow your wealth? Now, if you're doing all these 5 things, your score should be high enough. Okay, so anything over 700, ideally 720, puts you in a top tier position. So now you're gonna have lenders and other banks coming after you. They're chasing you now, okay, trying to give you money. Now, having great credit, you can leverage your credit and get a loan where you can use that to maybe purchase an investment property. Don't get me wrong, investments are risky. You want to make sure you know what you're doing, you're comfortable with what you're investing in. So don't just take my word for it. I'm just a random guy on YouTube just giving you my opinion. So by having great credit, you can leverage your credit to get a loan to either start a business, buy an investment property, make sure that whatever investments you do, that you're getting a decent return on investment. Okay, so if you're borrowing money based on your great credit at 4%, make sure that your ROI is greater than 4%. So that way it's profitable to you. Okay, but you want to make sure you do your due diligence and understand what you're investing in. So being able to leverage your credit to get loans and be able to acquire income producing assets is how you create wealth. It's unfortunate how everybody's so all uptight about my credit, or I have a 850 score, or I have a 760 score. But what are you doing with the credit? It's just a number. Okay, having a 760 credit score doesn't do anything for you. Yeah, big whoops, you have a 760, but what are you doing with that 760? Okay, you want to be able to utilize your credit, play the financial game, and get yourself situated where you are able to acquire income producing assets. So that's the key. You want to be able to acquire income producing assets with the loans that you get. Don't use your 760 credit score to buy a brand new BMW. What's the BMW going to do for you? It sits in your driveway, it takes money out of your pocket, the upkeep, the insurance, fueling, service, and all that. That's the wrong way to use your 760 credit score. Okay, the best way to use your 760 credit score is go to a bank, leverage your credit score, get a loan, buy an income producing asset that puts money in your pocket, and then you can use that money to buy your BMW. That's what I'm planning to do. Okay, my car is paid off. I have no loans on my car, but guess what? The next car I'm gonna buy, okay, I will make sure that my income producing asset pays for the car. So I'm leveraging my credit, I'm leveraging my income producing asset to fund my luxury. Okay, so that's how you do it. All right, so like I said, click the link below. Okay, get a copy of my book. It's a very quick, short read. You will get a lot of value from it. I took my time to write this. It's all based on personal experience and things that I have researched and checked on, and things that I'm applying in my life right now. So make sure you click the link below and get that. And also I have a bonus in each ebook on life lessons, and also how you can grow your wealth fast. Okay, so my credit blueprint has a bonus section where I actually laid out my strategy, my plans on how I'm going to build my portfolio of properties, okay, that will fund my lifestyle. So please make sure you click the link below, get a copy of my book, which will really help you. All right, so that's all I have for you today. Having a 760 credit score or 800 credit score means nothing. Okay, you want to be able to leverage your credit score and acquire income producing assets. Okay, make sure you know what you're doing, because every investment has risk. Okay, you have to make sure that your risk tolerance is in line with how you feel and what your objectives are. So that's all I have for you today. So thank you so much for being here again. Please, if you find value in my videos, please don't forget to leave me comments. All right, and then smash the like button, give me some thumbs up, please. I really appreciate it, and I look forward to your comments. And also check out my other videos as well, to see other things that you might be interested in that might help you. Okay, thank you all for being here, and don't forget, check my other videos, and I'll see you on my next video. Take care. Bye bye.